Well, good morning, good afternoon, and good evening, everyone, and welcome to this month's Trade Policy Research Forum webinar. We're going to be talking about India's trade policy in the 21st century today. But before we get to it and before we introduce our speakers, let me say a couple of words about the forum itself, in particular for those who might be visiting us for the first time. So the Trade Policy Research Forum is something that I, Ben Shepherd, started with my partner in crime, Hannah Norberg, in 2020. So we're in our fifth year of operations. Our idea, as you can see from the logo, was to try and bridge the gap in trade policy. And when we talk about bridging the gap, there's a few gaps that we want to bridge. One is between research and practice. So we're very conscious that there's great research going on out there, but often when you're a practitioner on the ground doing trade policy every day, it's hard to keep up with how the field is changing and what's going on. So we try to bring that to a broader audience. Another gap that we try to bridge is between the different parts of trade policy. There are economists, there are lawyers, there are policy specialists, there are public policy specialists, all of whom work on trade policy. And so we try to bring in research and discussion from different areas so that we're not always talking about just one thing. So we've had excellent sessions, for example, where we've had lawyers on, and Hannah and I, who are both economists, have learned a ton out of it because that's not our background. Then, of course, the other bridge that we're trying to cross is between the centers of the world that are kind of core areas for trade policy research. So thinking of Washington, D.C., well, is it still Washington, D.C., Brussels, and Geneva, where there are large concentrations of people working on trade policy. And then, of course, the huge amount of energy that's out there elsewhere in the world to work on trade policy, either from a national or an international standpoint, and to make sure that we have information flow going in both directions between those different places. So that's our aim. That's what we try to do. We bring monthly webinars to a global audience. The webinars are recorded and they go up on YouTube shortly after the session. We have a LinkedIn group that's pretty active. We've got 4,000 or 5,000 members of that group. So please do join the group and become part of the discussion. And for the post screen of our webinar today, you'll find a sign up link for our mailing list. That's the best way to stay in touch with what we're doing and what we're offering at any given time. So please do sign up for the mailing list, and that will enable us to let you know what we've got going on. So that's a little bit about the forum. We aim to be a positive and comfortable place for discussion. Everyone is speaking in a personal capacity. We're talking about a particular country's trade policy today and how it fits into the global spectrum, but we're all just doing that as people. We're not talking as any organizations. And with that, maybe I can hand over to Hannah to introduce today's speakers.
Absolutely. Thank you so very much, Ben. I think one thing that's worth to mention, maybe also about our previous webinars, is that every now and then we also do these career webinars that a lot of people are interested in, because a lot of people reach out to Ben and me and ask about career advice. And so we have crowdsourced that with the smartest people we know. So if you go on our website, you'll find all the previous webinars, and you'll find some really interesting nuggets there. Before I introduce our speakers, I'm just going to say a little bit of housekeeping rules. I don't know if we're not in the same house, but virtual rules, I guess we can call them. And that is that there's one thing that is always true in these webinars, and that is that we always run out of time. So please use either the chat box or the Q&A to post your questions, and do them as you go along. So don't wait till the end, because we always run out of time. And so if you want your questions answered, you're going to have to make sure that you get them in there on time. And so then we can weave them into the conversations as we go. So that's important. But other than that, I'm super excited for this new series that we're doing on trade policy as it looks now. So back in November, we had Michael Ferrantino, our advisor, and Mary Lovely talk about the US. And today we're doing India. And then next month, we're going to do on China. So I'm not going to spend a lot of time on this because content is way more important. But we've got Amita Batra. She is a professor of economics at, listen to this, University of Jawaharlal. That's my pretend Indian. It's my best shot at saying it. And she wrote a book that's called Indian Trade Policy in the 21st Century. And then we have a returning customer here, a frequent flyer, Amrita Saha, who is a research fellow at the University of Sussex in their Institute of Development Studies. And so without further ado, I'm going to hand it to Amita to get us started. And then we're going to let Amrita in, and then we'll go back and forth. And so please just start putting your questions in right away.
Do I go ahead?
Yes, please.
Yeah. Okay. Thank you so much. Thank you, Ben, and thank you, Hannah, for having me here today. I think, as Ben has introduced, this is a great initiative, much needed. And so I'm very happy to be here today talking about India's trade policy in the 21st century. I'm giving before I move on to the 21st century, there's a brief background that I start with in terms of what was on prior to the changes that happened, or prior to us moving on to the core of the 21st century trade policy as it has evolved in India. And here I talk about, the move that was very critical as far as India's economic history or India's economic trajectory is concerned, which is in terms of the 1990s. The liberalization that happened in 1991, starting 1991, 1992, and then moved on during the entire decade, taking forward the process of India's move away from what was still then largely an autarkic, inward-looking economy that focused on production through import substitution. And so you had a trade policy and industrial policy that was largely geared towards import substitution, very gradually moving towards liberalization in the mid-1980s that was considered to be more of a tinkering with the environment, creating a business-friendly environment to some extent, but not really moving the whole hog towards liberalization. The big liberalization, therefore, happened in 1991, 1992 in response to an external sector balance of payment crisis. And India opened up at that point of time from reducing, there was multiple strands to the liberalization process in the 1990s, of which liberalization of trade policy was one of the core elements. And as far as liberalization at that point was concerned, it was both in terms of a reduction in the peak tariff rates as far as India was concerned, which came down from a 300% plus to very low levels, two-digit, double-digit by the end of the decade. Reduction in quantitative restrictions and changes as far as the exchange rate was concerned, from a fixed exchange rate to a floating managed float that we did move on to within a few years of the 1990s. Initial itself, by 1993, we had moved on to a liberalized exchange rate system here. This moved on in the 2000s, continued liberalization that we had during this period. And we also have this period of the late 90s and early 2000s of a multifold major increase as far as global trade was concerned at that time. There was a very significant increase. Just to say also that I'm talking largely about the goods trade, the merchandise trade, with little focus on the services trade. So as we move into the 2000s, we do see very significant gains as far as India is concerned in terms of a rising trade to GDP ratio within the country. That is by 2000, 2005, and 2010, we had seen during this period, an increasing share. By 2010, almost a 50% share of trade in India's GDP. What was also at this time evident was that the share of merchandise trade in GDP was much lower, and much lower in comparison to what was happening as far as share of other comparable economies, emerging market economies in the world context were concerned. Particularly when we look at China, you see by 2008, China had already become a major trading partner of most economies in the world. And India, although it made a transition from having a very insignificant share of total trade as far as the world was concerned, it moved on to 1% by the turn of the century, that is 2000s. And then it started to increase by 2010. It was around 2%. But over the last 15 years or so, India's share in global merchandise trade has continued to remain around 2%, plus minus 0.2 or so. So the big the major issue that one looks at, is that although we did have an increasing share of trade to GDP within the country, we did have liberalization as far as trade policy in the late 90s, early 2000s was concerned. By the way, the reduction in tariff continued well into the 2000s, um, went into the 2000s to early 2010s as well. What we did not see was a simultaneous increase as far as India's share in global trade was concerned. And to this, one would say, that as far as my analysis of India's trade policy in the 21st century is concerned, it largely focuses on where and why did India miss out on what was becoming the major component as far as global trade is concerned. Three-fourths of the world trade, you know, contributed by merchandise trade. Within this, it was majorly manufactured goods trade that was contributing more than three-fourths. 75 to 80% of global goods trade was contributed by manufactured goods trade. And if we look at India's trade ratios, we see a declining share of manufactured goods exports, both in India's total exports as well as a share of global flows. Global flows of merchandise exports. So there was something that was going on as far as the world was concerned, and India was increasingly, kind of distanced as far as the changes in terms of world trade trends were concerned. And the big share or the big change that we see, or that one would observe during the late 90s and early 2000s in the global trade scenario was one where there was a change in the nature of trade. From what was earlier based on the old theoretical precept of comparative advantage in terms of final goods moving from one country to another and being consumed in the destination country, things had changed from what we call as unbundling of production and segmentation of production. That segmentation of production that had led to what was now becoming more and more a trade that was being led by global value chains, trade that was being led by parts and components trade, and this GVC, that is global value chain led trade, was becoming the major mechanism for trade for all countries to participate in. As one looks at the other economies, whether we look at any of the emerging market economies, particularly if we look at the neighboring East Asian ASEAN economies, one looks at the period of 2000s, late 90s, in fact, and into the 2000s with their increasing participation in global value chains. It was an increasing proportion of backward integration that enabled them to participate in global trade, enabled them to participate at the lower end of the production stages. And as parts and components moved across borders, these countries were able to participate and add value, even though that was minimum value, to components that were coming to these countries for further assembly in another country, led by Japan first, China later. It was all of the ASEAN countries that were gradually able to participate with what was core to this entire strategy, that is an export-oriented trade policy. And that export-oriented trade policy that was followed by these countries that were able to increase their share in this major mechanism of global trade as it was evolving in the 2000s was that they started to offer preferential tariffs on some of the commodities, that is on inputs of imported inputs. These ASEAN countries started to offer preferential tariffs in combination with ease of investment policies. That is, the core of the trade policy was a dual tariff policy where there was a preferential tariff that was offered on parts and components in contrast with final goods. And this is what facilitated their participation increasingly in the global value chain led global trade as it was evolving during this period. And one of the major mechanisms that one looks at, you see, at this point of time, if you try and highlight what is it that was really leading them or facilitating their participation in this global value chain process, you see that one major element for them was major trading arrangements that they participated in. Early on in the 1990s, you look at Thailand and Japan having a cooperation arrangement, you see, as far as preferential tariffs were concerned in intermediate inputs in the automobile sector. Automobile sector is a thriving sector as far as Thailand is concerned. This later became a policy in the electronics industry in the entire region, starting with Malaysia. That was the initial hub of the electronics industry. All of this meant that greater participation in preferential trade agreements, you see, for the ASEAN countries, it was with Japan, it was with China later. It was their common effective preferential tariff under the ASEAN Free Trade Agreement. It was their signing the International Technology Telecommunications Agreement, the ITA 1, 2. All of that facilitated their participation in a trade context that was completely dominated by parts and components trade. And when you look at these components, in case of India's trade policy, we see that in the 2000s, although India did initiate a process of participation in free trade agreements, these never evolved to a stage that one would see or one could see in the rest of the world. Of course, rest of the world had moved forward. There was a NAFTA that had started originally with the Auto Pact of the late 1960s to NAFTA, which was one of the major lead trading arrangements in North America. And you have the EU moving forward with its own processes. ASEAN, Southeast Asia, as I said, had its own preferential processes. Now, India did have free trade agreements, but as I said, in these free trade agreements, India has been, or was at that time at least, till what we see a change in 2021, but I'll come to that. So what we saw was a large number of trade agreements that India did sign. There were a lot of preferential trade agreements. We had about 12 to 13 preferential trade agreements that India was a part of. But the extent of preferences that were granted under these trade agreements was limited in number, in proportion. That is what was otherwise, required as far as the WTO is concerned in terms of substantially all trade. India rarely had preferential trading agreements or FTAs that it signed to cover more than 75 to 80% of the tariff lines that were being traded. It was never 90% or so. And one reason for this was India's reluctance to reduce the tariffs as was required under preferential trade agreements, under the FTAs, which required that ultimately you do bring down the tariffs to 0 or 0 to 5, somewhere around that. So the fact that we did beyond a point, beyond the 2010s, we did start to see a reluctance as far as tariffs are concerned, reduction in tariffs is concerned, started to impinge upon India's negotiations also as far as these trade agreements were concerned. Significantly, the kind of preferential margins that India offered were much greater to the partner country than what India got in these trade negotiations. The higher tariffs, as far as India was concerned, led to India offering a much larger preferential margin to its trade partners in an FTA than what it was getting in return. The benefits, obviously, therefore, as far as pure goods trade was concerned, was accruing to the partner country rather than to India. So that India's initial foray into free trade agreements, such as the ASEAN, those with Japan and Korea that happened in the 2010s, did not really yield the results as they did for other countries. What we did see at that time was an increasing trade deficit with these economies, which started to give a negative, which started to build a negative perception as far as free trade agreements in India is concerned. And that kind of build on, or that kind of led to a growing amount of hesitation on India's part to further its policy as far as participation in free trade agreements is concerned. Many of these trade agreements by the end of the 2010s, you see, were in the process of review, particularly the India-ASEAN FTA, India-Korea FTA, have been in the process of review now for some time, So that's been the larger context as far as our free trade agreements were concerned. But what we also saw during this time, you see, that is in the 2000s, was the slowing down of the WTO. And as the WTO slowed down, with how one sees it in a, coming from India, is the lack of you know, coming together or convergence as far as the demands of the developed and developing countries was concerned. A round that was meant for developing countries did not achieve ultimately the interests of the developing countries, you see. And so that kind of lack of convergence, the slowing down of the WTO in terms of movement forward, that led to an increasing number of FTAs around the world, impacted India in the sense that India had always placed greater faith in multilateralism. And so getting on to this bandwagon of the free trade agreements was much slower for India to begin with. Its higher tariffs and preferential margin that I talked about earlier also impacted the process as we moved forward. And the third aspect was that in the 2000s, what we saw was a greater deepening of the FTAs across the world to facilitate the kind of trade that was happening at that time. The complexity of the value chains, the multiple border crossing as far as parts and components were concerned, brought in two very significant elements as essential components of free trade agreements, which was A, investment liberalization as inextricably linked to trade, and intellectual property rights. That is, these two chapters and these two elements were very, very significant in terms of bringing about or attributing greater depth to free trade agreements. And more countries that were getting or participating in free trade agreements, including in the Southeast Asian ASEAN bloc, such as Vietnam, started to accept these and make the consonant changes or accompanying changes in terms of domestic reforms, whether it was in terms of regulatory policies within, or whether it was investment liberalization and bringing about suitable changes in what they thought was appropriate as far as participation in or inviting FDI in these countries was concerned. That inextricable link between liberalization of trade in goods, liberalization of investment, liberalization of domestic regulatory framework, or aligning the domestic regulatory framework with international standards, these links, I think, were missing as far as India's trade policy was concerned. Much too much the focus was placed on tariffs. The focus was placed on increasing deficits with countries with which we had FTAs in the early 2000s, you see, so that India's FTA process by itself slowed down towards the mid-2010s, We have, in the more recent times, picked up on our process of integrating or aligning or participation in these FTAs. 2021 onwards, India has increasingly become, conscious of the fact that global trade does not happen without participation in FTAs, and FTAs have become the alternative mode that is available, alternative to the WTO. The WTO has been dysfunctional now for some time, So while India in the recent years, you see, in the last 4 or 5 years, we've increased the number of FTAs that we've participated in. There is the UAE. We have revived the negotiations with the European Union. We're negotiating another one with United Kingdom. All of this has happened with the EFTA countries. We've signed one with Australia. We've signed another, which is an early harvest scheme. So all of this is happening. But then again, there is another aspect, you see, that has become very prominent in the 2010s and more so in the 2020s. And this is the increasing element or the increasing number and depth of provisions that relate to ESG clauses. That is the environment and sustainable governance elements and provisions that have become a very core component of almost all FTAs across the world, you see. More and more countries want ESG to be a part of this, both because there is an increasing challenge as far as climate change is concerned and the manner in which it is impinging on the world as such, And also because as far as worker and labor conditions are concerned, there is an entire political economy to it. There is a political backlash as far as distributional gains in terms of international trade being questioned are concerned today. All of this implies that environment, worker conditions, etc., become a significant component of these trade agreements. India, however, has, for a long time, as I said, placed its faith in multilateralism and in its stance that was, adopted right from the beginning in terms of discussions or negotiations at the WTO in terms of trade being restricted to only those issues that are trade issues. And we have continued with that policy of, classifying these issues as non-trade issues and resisting the inclusion of environment and labor worker conditions, actively in terms of number as well as depth in the trade agreements. Many of these aspects, you see, including now what we see in terms of a CBAM being introduced by the European Union, have become issues that are difficult for India or that have been seen to be difficult as far as India's move forward in terms of changing its stance as far as non-trade issues are concerned. What it continues to classify as non-trade issues, although I feel that we need to bring about a change as far as our perception of these or continued classification of these as non-trade is concerned, But that's been the larger Indian trade policy framework where we have continued to believe, you see, that these are, or the trade policy has continued to be structured in a way where our participation in FTA continues to be focused only on tariff liberalization and services where we have restricted our perception only to what we consider to be our sole big comparative advantage, which is in terms of Mode 4 or movement of professionals, which is now also being negotiated separately as mobility agreements. Again, my own analysis is, kind of reflects differently on these aspects in terms of services being a part or embedded services in manufacturing being a very critical component of what production today is and what trade today is. And India's, comparative advantage, specialization that we have in terms of digital provision of digital services, as well as some of the core services like, maintenance, repair, etc., can be integrated into the FTA negotiations. But I'll come to that if we have bring this back in our discussion. But the last point that I want to bring in here is, you see, that the fact that India was not able or has not been able to really move forward in terms of what have become the major mechanism, whether that be the global value chain or whether that be the facilitative mechanism in terms of FTA, is reflected in India's low participation in value chains. Our participation increased till about the 2010, 2012, and then started to decline after that. It has never been comparable, or it's not really been comparable to our East Asian neighbors, Southeast Asian neighbors. And so what has really become, what this really reflects, and how this impinges on India's trade share in the global trade and export flows, particularly in merchandise, is that the most dynamic sectors as far as global trade is concerned in the 2000s have been those that have been led by global value chains. That is, those that have been, that have had their core in terms of modularity, in terms of being broken into parts and components or segmentation of production, electronics, automobiles, the earlier textiles and clothing value chain, So the fact that we've not really, that there has been a certain distancing, or conscious or otherwise, because of all these elements that I've talked about, in India's trade policy, there has been a certain element of India's inability to participate in what has become the core component of global trade. What is the predominant mode of global trade? The underlying mechanism of global trade, And this is carried on for some time, so that even when, repeatedly there have been opportunities for India to join, participate, integrate with global value chains, we've somehow missed it because our trade policy has not become oriented towards this predominant mechanism. We had the opportunity post-global financial crisis when we had a restructuring to a certain extent, initiation of restructuring of global value chains, when nearshoring started to happen. 2008-9 global financial crisis, the East Asian natural disasters, floods, and so on, in Japan, followed by Thailand, etc., that led to a certain amount of movement, restructuring, diversification of global value chains. India had an opportunity, but we had not as yet upped our game as far as our trade policy was concerned. Again, as far as the pandemic is concerned, not just the pandemic, in fact, just before that, when President Trump in his first term started to bring about tarification, selective protectionism that it was initiated at that point of time, India again had an opportunity because that's when the China plus one really gathered momentum, you see. The pandemic followed. Again, India has had these opportunities, but we've not really been able to build or really been able to pick up on these opportunities because of the lack that we see, or because of the distancing, a certain amount of gap that we see, you see, in terms of what is the required trade policy, what are the required facilitative mechanism, what is the depth of that required facilitative mechanism. Even if we've started to pick up on doing more FTAs, the depth has to be more. All of this means, you see, that there have been opportunities, but we haven't really been able to pick up momentum in terms of our policy. The current environment, again, I think provides India with another opportunity. In fact, I feel in the last post-pandemic, post-Ukraine crisis, it's a very, very opportune moment for India once again to participate in global value chains as well as global trade context, in the merchandise trade context particularly, which remains the dominant component of global trade, because it is the geopolitics today, you see, that provides India with a very favorable position. There is interest in India. India has stable macro fundamentals. India is geopolitically very favorably placed. You see, India's alignments allow it to be an attractive investment opportunity. But what I feel at this time, you see, that the needed required reforms in terms of further tariff reduction, in terms of greater investment liberalization and reorienting what we have as our model investment treaty, and to a very large extent, also creating an ease or a more, a more open trade environment and a more open facilitative business environment with fewer regulations, easing out the regulations for business to come in, investment to come in, and investment that is of the nature of export orientation that can also bring in a certain amount of technology, you see, where India's base in terms of its STEM graduates provides it with the opportunity to go way ahead of where Vietnam is today, in terms of its limitations as far as its human capital is concerned. I think we have a huge opportunity if we were to make the right changes in our domestic regulatory framework, align it with international standards, and bring about changes in our tariff structure that would align us with our comparator emerging market economies. I think India can make good of this opportunity. I think I'll stop here and happy to answer questions.
Wow. Thank you, Amita. That's a really fantastic presentation. We've got a lot to talk about. The shift from inward orientation to outward orientation. That's been going through your talk. The relationship to peers in the region. So sort of India and ASEAN. What do we see that's relatable? What do we see that's different? We see improvements in India's position, increases over some of this period of time in its share of merchandise exports, but a declining share of manufacturing. And of course, the rate of increase has not been as quick as we've seen in other comparator economies, again, particularly China and Southeast Asia. What do we make of all of that? What do we make of India's approach to FTAs and how that's been changing over time? So I think we've got a tremendous amount to talk about. Before we get into Q&A, let me hand over to Amrita, who's going to give a few comments and maybe her take on some of this as well. So, floor is yours.
Thanks, Ben. And sorry if the audience today is confused about our names, right? They're very familiar. So, thanks. I think that was a really interesting, overview of India's experience and Indian trade policy setting. And I think I just sort of add a couple of points to that sort of comprehensive overview that Amita has already set out. So I think, for reasons that have just been outlined, I think the Indian trade policy setting has always been a very interesting one. It has a unique, I think, in many ways, a unique political economy history. Because on one hand, I think there is the ambition to kind of, harness trade as the engine of growth. There is also, on the other hand, constraints which kind of emerge from India's more sort of development imperatives. Now, I think without sort of, spending too much time, I just wanted to kind of summarize that, yes, so as, Amita explained, of course, historically, there have been high trade barriers. As we've seen in India, reforms of 1991 were apolitical, came in through IMF support, but subsequent, the point that I want to make is that subsequent sort of multilateral and unilateral reform that we have seen came up quite a bit from sort of domestic political processes. And what that sort of translated to were very significant differences across sectors. So from a research perspective, I know we have an audience of early career researchers as well. There are huge intersectoral differences which are observable in India's experience of trade policy. And so you'll see a lot of literature, initiated by Topolova and others, looking at that experience of intersectoral differences for India. A little bit about the political economy of this, right? So until the 90s, what we can term as sort of state business interactions or domestic interaction for trade policy was very much at the margin. But we see that scenario transform quite significantly by 2000s, right? And domestic producer interest or business interest sort of began to have that voice, which could determine negotiation positions with the apex organization, so as this, which is the Ministry of Commerce and Industry, which oversees Indian trade policy, and that, also reflects in how India started to engage increasingly in international negotiations, including at the WTO. So we see, the intersectoral differences that we see in India's trade policy in that sort of 90s to 2000 and onwards, it kind of overlaps with also the political economy side, where there's a fragmentation in ministries and sectoral interests. And so sort of, greater domestic movement and voices kind of were informing those cross-sectoral differences that we see. And this was kind of also my experience, which I kind of was able to study quite in depth in my own PhD now, many years ago. But yeah, and sort of another point that I want to make is, yes, so, Amita has already talked about India's stance at the WTO. Yes, India is known for its fairly tough stances as a negotiator, right? And there are different narratives to this. But I do agree that, India has always sort of believed in the importance of the international trading system. But it has also, of course, contributed to different deadlocks that we have seen. But, a lot of that kind of reflects back to the domestic sort of political imperatives. And of course, now we are even in a, even more complex landscape with environmental and social regulations. And it's a much more complex landscape. And we see a reflection of that. I'd like to highlight kind of, the role of business in all of this, right? So in the 90s, while we don't see a lot of, business voice, by sort of the end of the 90s, we see the emergence of business organizations. So that may be CII, Confederation of Indian Industry, or FICCI, the Indian Chambers of Commerce. These were really active in the decades of 2000. So, the combined interests of domestic businesses, again, kind of, link back to the cross-sector differences that you'll see in your trade policy data. And sort of, just two final points. Trade agreements, I think this story is, of course, incomplete without talking about India's past experience, but also now increasing appetite for trade agreements. But I think, in my view, I still see a lot of sort of caution. And, I think a lot of narratives might term India's stances of sort of very cautious ambition, I think. While we see a lot of interest in negotiating trade agreements, I think, what Amita also explained in terms of the preferential margins, but also now, of course, for example, I'm sitting in the UK. The UK-India trade agreement has, of course, been negotiated for the last more than 2 years. What is the likelihood of that agreement going forward, remains to be seen. Of course, the India-EU agreement is being negotiated as well. I think the point, there have been a lot of points where, there have been few sticking points in a sense, right? So around regulations and data protection. So I think the point, or rather sort of a challenge has been, again, I think I'd like to say, sort of the development side of things, where, we see the backlash, right, for against protectionism or for free trade on one hand. I think while I think India has that ambition of using and, harnessing much more trade as an engine of growth, I think we must remember there are important implications for economic inequality. And of course, now we're at a time where there's sort of global concern about the future of sort of trade. And I think if we kind of take a step back and maybe learn from sort of, recent or past experiences of how we've seen distributional consequences of trade shocks, that can really inform trade strategies, including for India. And I think there it's interesting because, across Indian states, the trade exposure is quite different. So in our own research, when we look at sort of, for example, trade exposure with the UK or trade exposure with the US, there are huge differences, sort of regionally. As an example, as a case study, we looked at US termination of 2019 of its unilateral preferences with India. And we, and there I think there has been two sides to the debate where, one has argued that India didn't have much to gain from the unilateral trade preferences. So there wasn't much effect. But what we find actually is that, the effects were really, really concentrated to specific sectors and specific regions. And that was kind of largely driven by firms resorting to occupational restructuring, and the lowest skilled laborers in urban areas were hugely affected. But of course, that was not in the bigger picture, that was not the headline. So I think I'd like to just, end with the thought that, while I think Indian trade policy setting has always been interesting, I think it's unique political economic history, but also it's, continuing sort of development imperatives makes it a quite sort of tricky one to sort of negotiate, especially in current uncertain times. Thank you.
Thank you. So if we didn't have enough on the agenda, we've now got political economy and the geographical distribution of trade integration as well. So look, that's fantastic. I feel like we've really got it kind of all on the table. I'm going to indulge myself by asking one big picture question that maybe you can both respond to, and then we'll pull some out of the Q&A. And the big picture question is about, philosophically, in Indian kind of public policy as of now, 2025, where does trade fit into development and industrial strategy? And the reason I'm asking the question is that from the outside looking in, there are sometimes contradictory signals. On the one hand, there's Make in India, which is a program that is designed to make India a manufacturing hub, a GVC hub, and seems to be based very much on the kind of outward-looking, import to export kind of model that Amita was talking about. So that's there. That's government policy. There's money going into that. That's happening on the one hand. On the other hand, we have a policy called Atmanirbhar Bharat, which is self-reliant India. How do we put those things together? How are we both importing to export in the manufacturing sector and also ensuring self-reliance? Um, are those two objectives compatible? Is it a question of how far we go in each direction? Or is there something more complicated going on in the politics of trade policy in India? And maybe, Amita, if I can start with you.
Yeah, thank you, Amrita, for your comments. I think some very relevant aspects that you bring in as far as developmental issues are concerned in our trade policy. But for Ben's question, in terms of how do you reconcile the Atmanirbhar and Make in India with what is also, a stated objective in terms of export growth as far as India is concerned. I think, the one aspect that one needs to understand here, or there are two or three aspects here, that one would understand. One is Make in India, as far as the goal is concerned, is never stated as Make in India for India. It's Make in India for the world.
Right.
That's the idea. The idea, of course, has to be followed by, consonant policies. They have to be in accordance to be able to promote greater production, not just for within, but for outside. You need to invite investments for that. There has to be an environment both to attract investments in terms of facilitative business environment, as well as you need to allow the bringing in of, as I said, imported inputs in order to bring about increased efficiency and become competitive. The question of manufacturing and manufacturing enhancement, competitiveness enhancement, is absolutely critical for India at this time, because manufacturing is what can lead to employment enhancement, which is one of the biggest challenges that we have today. So enhancing competitiveness, manufacturing competitiveness is at the core of India's general development growth policy. So that is there. But the other part, where my own writings have been, in terms of allowing, lowering tariffs so that we can integrate with value chains. We can enable both our domestic producers as well as foreign investors capable of importing what can lead to greater efficiency. The hesitation arises, I think, on the part, in terms of having, higher local content rules and the need to bring about also an enhancement in domestic value addition. That's a constant pressure that exists, that we must also we should not be inviting investments that only comes and invests and exports. We have to have investment that also leads to technological diffusion, that leads to enhancement of domestic production capabilities in the longer run. We have the capability in terms of engineering talent, So why shouldn't we be inviting, in the first place, investment? Yes, what we are looking at as a great success in the electronic industry, in the iPhone, for example, if you've gotten Apple, you've gotten the contract manufacturers, only a couple from India, from outside as well, but you're increasingly moving towards trying to upgrade yourself from the lowest end of the value chain to some of the higher, segments of the production process. Similarly, there is a great amount that's happening as far as chip production is concerned. New technology areas are concerned. There's a lot that's happening as far as solar panel production is concerned. Again, as far as EVs are concerned, if you look at our budget speech this time, or the budget as far as 2025 budget is concerned, the February budget gives you a set of input commodities, inputs, where the effective tariffs have been reduced in order to enable India's integration with value chains. So the process has started. It's a small start, I agree. It has to really take off in order to really make India a manufacturing hub. But there is a conscious realization that this needs to be done. Some is happening, some has happened, and more is expected to happen, So the understanding is there, the realization is there, the process has taken off to a certain extent, but it needs to gather pace and be accelerated further.
Amrita, do you want to come in on that as well? And if I can just put something additional into the conversation with you. I mean, we've been talking about the sort of policy restrictions that businesses have to deal with. I mean, they have to deal with them everywhere, and India is no exception. But I think your remarks brought up in the chat box the question of state level policies. So, what are we seeing in the interaction? This vision of Make in India, for example. How does that fit with state level business climates, and what are we seeing in terms of a business climate and investment climate reforms at the state level?
Yeah, no, thanks. Thanks, Ben. I'll keep my response short so we can take some questions, definitely. I think, the thing there's a sort of tension in I think what we are kind of witnessing in terms of, thinking about how do we sort of boost manufacturing, employment, jobs. And I think we kind of, need to be cognizant that, technology is evolving rapidly, and there's sort of, the effect of AI and so on that we need to consider when we talk about labor market effects or consequences of sort of, expanding trade in manufacturing. Now, of course, now India is a country where we need to think about labor market effects quite consciously, because, we might say that policy should boost manufacturing growth and that leads to jobs. But, that the landscape could be quite different very rapidly, right? And I think, and so that's why I think I want to make the point about sort of there being, quite significant differences when we look across Indian states. There's definitely a concentration of production in some than others. I think, and here's where the need for data and evidence, because, do we kind of significant, and I think I really like the question that Apurva has asked, right? So how do you see, and you've also mentioned it, Ben, so how do we see kind of that state level and the national level debate? And I think what we hear more, significantly is sort of the national dialogue. But when we, unpack that to state level labor market effects, the scenario is quite different. And some states, for example, northern states, some specific areas which, export quite a lot to the UK, US markets, might be seeing much more sort of, business reform and business friendly reform than others. So kind of how do we, align that tension is something that I think we would need to kind of think quite seriously if we were to sort of be more cognizant of India's development imperatives, in addition to its ambition, of course, which remains. I know we're running out of time, Ben. I'm sure we can talk loads about this, but over back to you.
There's tons to talk about. Indeed, let me maybe hand over to Hannah, since we are indeed getting towards the close. I'm sure she's got a question or two to put into the mix as well.
Thank you, Ben. I just might have that. First, an observation. I think that what we're seeing in Canada is that all of a sudden they are, their interregional trade restrictions have been, everybody knows about them and they're crazy. And so all of a sudden now there is this initiative, a global or a national initiative to take those seriously as they're getting under pressure from Trump. So I think that is, as Amita would say, an opportunity. I think. But so I have two questions, actually. So the one is that, Amrita, you were saying that there is data and evidence that should be, could be needed. For those researchers who are on this call, or looking at this, backwards, what sort of data and evidence do you think could be impactful? And for Amita, my question is for policymakers who are trying to move the needle for India, whether bilaterally or multilaterally, what sort of arguments do you think could get some momentum going in that political economy?
Should we start with Amrita? Yeah.
Okay. Yeah. I think that's probably tricky question, but I guess, I think there's increasingly researchers trying to make use of more high frequency disaggregated data and link it with sort of trade and trade policy data. Now, the trade policy data is, of course, more easily available on goods and so on, and to a certain extent, services and non-tariff barriers. But that sort of disaggregated high frequency data, which allows us to make the links and kind of, I think respond almost, well, today's situation is really dynamic. We don't know what's going to happen tomorrow. But, having that data and evidence can be quite important, I think, collateral to sort of understand what's coming. So I think combining trade data with new types of information and high frequency information on labor markets, households, big data, I think that's what I'm sort of interested to explore and also hear from others if they have ideas.
Thanks. Amita, do you want to?
Yeah, just a quick point on the earlier point that was made by Amrita in terms of interstate. Some of the policies are state level policies in case of India, such as labor policies. So you do see differences across both in terms of how these policies have evolved and how they have responded to centers, larger context of change to be brought about. And you will see certain states in attracting more investments, for example, moving ahead as far as, foreign direct investment is concerned, upping their game as far as participation in value chains is concerned. So all of that is, the interstate, interregional differences you see that come about to a certain extent are attributable to the fact that you do have certain policies that get formulated, implementation in the hands of the state administration here. The Hannah's question, in terms of the political economy, if you could just give me that question again, sorry.
Yeah, the question is, what sort of arguments could be made by those who wanted to get the momentum going?
Yeah, the argument here, as I feel, lots of changes that are required, lots of changes in terms of what India should be doing in terms of creating a more open trade environment, easing out business environment, One is, of course, that natural tendency on the part of the business in India, to feel that they have a large domestic market. And so, much comes from the domestic market itself, But I think what is really, one is in terms of educating the business, in terms of the advantages of opening up, technological upgradation, you see the possibilities of that, greater efficiency and greater ability to participate in global production and exports, including in terms of upping their technological abilities. I think that's a very big part of how India needs to see, even as far as FTAs are concerned, other countries have benefited. So just this basic understanding of what a free trade agreement is really and how does it impact positively to give greater gains to business. I think that's the business side of it. The other side is also in terms of what does it do in terms of distributional gains across. Amrita pointed out to some of these aspects, you see, but there are concerns. There are real concerns in terms of livelihood as far as India is concerned. Food security aspects that need to be taken care of when we're talking about liberalization in certain sectors, agriculture, dairy, for example, there are issues that are related to livelihood concerns, So till we have the other side also conscious and making this, reflecting their understanding of these livelihood concerns of India, you see, that will make it easier to both negotiate and create the right kind of balance between both sides, in terms of gains. I feel because political economy, you see, brings in the aspects of livelihood concerns as a very significant issue in India.
Well, we've just come up to 10 o'clock my time. I should say, Amita, if you figure out the political economy of Indian trade policy and getting people to recognize the good things that come out of trade agreements, I think you'd have an audience in Washington, D.C. at the moment, because we seem to have forgotten some of that. So it's great to hear it all, so well in hand in the analysis that you've given. This was actually a really active seminar. There are tons of questions in the Q&A and in chat. So thank you, everyone, for giving us those. Unfortunately, we didn't have time to get to them. But I would invite everyone to continue the discussion through our LinkedIn group. Both of our presenters are happy to be in touch with people that way. I think in particular, there were some really interesting questions, both on services. So we talked a lot about merchandise trade, but services, of course, is a huge deal for India. What are the kind of policies that we need to think about for being more integrated into services markets and building on that success? And then also on FTA strategy. How do we deal with the kind of the big countries problem that lots of people want to sign trade agreements with us, but to get the agreement signed, they're willing to make it shallow, which in a sense does not benefit us as much as it might. And again, that's an issue that I think is not just for India, it's for a number of large strategic economies around the world. So look, thank you to both our presenters. Amita, that was a really sort of fantastic summary of how India got to where it is today, through all these huge turning points that we've seen from the 1990s onwards. And, it gave us a sense of the sorts of questions that we need to ask going forward. Then, Amrita, I'm really glad that you brought political economy and the geographical issues into the discussion. I think all of us in trade policy need to be aware of that because that, after all, is how trade politics is made. So I think we had a really great discussion. Thank you to our presenters. Thank you to Hannah for being here with us as well and adding some great questions there at the end. Thank you to our audience for being with us. And let me just give a quick plug for our session next month. It's on April 24th. And we'll have Henry Gao from SMU and Huan Zhu from the China Trade Monitor talking about the new Chinese trade policy. So we're doing a bit of a cycle, as Hannah said. We've talked about the United States. We've now talked about India as well. We're going to talk about China next month. And we'd like to do a session on the EU at some point in the future. It's a very turbulent trade policy environment. But you can rely on us to have a webinar once a week where we take once a month, where we take a step back and try to think about what's going on and learn from each other. So with that, thanks everyone, and we'll see you next time.
Thank you. Thank you.
Okay, thank you. Bye-bye.
Thank you so much.
Bye-bye. Thank you.